Good day, ladies and gentlemen. In this video, I'll be teaching you a very versatile strategy. I call this strategy versatile because it can actually serve you if you are a swing trader, if you are a day trader, or a scalper. So it does not matter whether your style is swing trading or scalping or day trading, okay? So it does not matter. So it's going to serve everyone, okay? So if you're a swing trader, scalper, day trader, this video is for you. So you can actually adopt and apply this particular strategy, okay? So how does this strategy work? And the good thing about this strategy is very simple. It only has to do with the use of a single candle. Just one candle is all you need for this strategy. That's the reason why it can actually serve different types of traders. Okay, so since it's just one candle, if you're a swing trader and you like to hold your position for several weeks, all you just need to do is you need to use the weekly time frame. So a single candle on the weekly time frame covers the full week. Okay, and if you're a position trader that like to hold your hold your trades for several months, then you use the monthly time frame. So a single candle on the monthly time frame is going to represent a full month. Okay, so if you're a day trader, you can use the daily time frame. Okay, and if you're a scalper, you can use probably the 1 hour time frame, 4 hour time frame. Then you take your entries on 5 minutes or 15 minutes, something like that. Okay, so it still works for all types of time frames, and the reason behind this is because price is fractal. You already know that price is fractal. Okay, when you say price is fractal, for those that don't know what it means for price to be fractal, it simply means that whatever is happening on a bigger time frame can also play out on a lower time frame. You and I know that you can have fair value gaps on higher time frames like daily time frames. You're going to see your fair value gaps there. If you go to 4 hour time frame, you also see fair value gaps. You go to 5 minutes, you see fair value gaps. So price is fractal. Things happening on the higher time frame can happen on other time frames. So it does not matter what kind of trader or which kind of trader you are, you can apply this particular strategy. So without further ado, let's get right into it. So what do you need for this strategy? You need a single candle, like I said. So for example, let me give you the illustration before we go into the examples. Okay, so this is what we're talking about. This is a single candle. Okay, so you have this single candle, and let's say the candle is a bullish one, for example. So let's say this is a bullish candle right here. Okay, so the thing is, we need to understand the anatomy of this candle. All right, so since this candle is a bullish candle, it means that this is where the open of the candle is. The candle opened somewhere here, right? It's opened there, then it made a low, right? It pushed downwards to make a low, then it pushed upwards to make an high. Okay, it created an high, then it pushed down a bit, then closed at this level. Is that right? It closed at this level, making it a bullish candle. Okay, I hope that is very clear. All right, so we have our open, we have our high, we have our low, and we have our close right there. Let me take these off. Okay, so let me this is our low. Let me put the L right here. This is our low, this is our open, this is where the candle opened, this is our high, okay, and this is our close. All right, now if you go to a lower time frame compared to the time frame when you are looking at this particular candle, this single candle, if you step down to a lower time frame, let's say this particular time frame is let's say this is the daily time frame, and then you step down to 15 minutes time frame, what you're going to see happen is from the beginning when the candle opened, you have a little bit of consolidation. Okay, market will consolidate a bit like this. Okay, then it's going to what's it called, manipulate in the downward direction, making traders think it's a bearish candle. So it manipulates in downward direction to form the low. Okay, so it manipulates towards the downside to form the low. After that, it will start giving you, you know, higher highs and higher lows, higher highs and higher lows towards the high. Okay, it will move towards the high, then it will come down a bit to form the close. All right, so this is the anatomy of the candle. You are going to have accumulation, which we also know as a consolidation. Okay, price will accumulate for a while, then it will manipulate downwards as though it wants to move in the downwards direction, fooling a lot of traders to take sell positions. Okay, then later, once it has formed the low, it will then displace. Okay, so we have accumulation, manipulation, and displacement. Okay, or you can call it distribution. Oh, okay, so you can have accumulation, manipulation, and distribution. The distribution phase is also the displacement phase. So, and that displacement phase is the phase where you actually want to trade. That's the phase where you get in the right direction of the market. You get in the right direction where the big players want to move the market. Okay, they did this downward movement in order to fool people, so you won't, follow them on the major move they want to make. Okay, so the distribution phase is where you want to trade at. That's when price moves upwards, then it forms the high and then comes down a bit to close. That's where you now have this daily candle that you have right here. Okay, so understanding this, everything that happened here will help you frame trading idea. Okay, so I'm going to be explaining how you're going to be utilizing this particular system. Okay, so let's proceed to some examples. I don't want the video to be too long. Just, one example or two is going to make the concepts very, very clear. Don't need to overstretch it. Let me go to the daily time frame. Okay, so right here I am on the daily time frame. Okay, so I'm going to be using this candle for the example. This candle right here. Okay, so I'll mark out the high and the low of the candle. This is the high of the candle and this is the low of that candle. You can see I've marked out the low and the high of that big bearish candle. Okay, so the thing is, if a candle closes bearish, you're expecting the next candle to close bearish. That's just the way the market works most times. You can see this candle closed bullish, the next candle closed bullish. This candle closed bearish, you expect the next candle to close bearish. This candle close bearish, the next candle close bearish. Okay, so most times that's just how the market moves. This candle close bullish, the next candle close bullish. So why did I quickly give you that piece of information? It's very important because when the candle closes, then when you have marked out the high and the low of the candle, the following day, that's when you will now apply this system, already having a bias in mind that market is going to move in the bullish direction. Okay, so that's just the excuse me, that's just the background of the trading system. Okay, so I've marked out the high and the low. Let me put this vertical yellow line on it so that when I step down to the lower time frame, I'll know exactly where that particular day started. So let's go to the 15 minutes time frame. So I'm moving from daily time frame now to the 15 minutes time frame. Okay, so where's my yellow vertical line to show me where that day started? Okay, right here. So this is where the day started. If I move this yellow line away, you see the period separator. The vertical period separator is going to be there. Can you see it right there? Okay, so those broken lines. Okay, so let me put it back. So this is where the day started. Now, what do you see happening? This is a bearish candle. As the day started, we had accumulation. So price was accumulating, right? After accumulating, it took out the high. The reason why it accumulates most times from the beginning of the day is because the beginning of the day is usually the Asian range. Okay, it's usually the Asian session, and the Asian session is depicted by consolidation most times. Okay, so that's why that happens. Okay, so the high of that consolidation was taken out, fooling traders to think price is gonna move higher. Okay, some people will be like, oh, this is a break of structure to the upside, so it is high time I took a what? It's high time I took a buy trade. You just gonna blow your account if you don't understand what I'm teaching in this particular video. Okay, so price manipulated to the upside and then distributed to the downside. You can see the way it started moving lower. So that upside, as it moved to the upside, it's from the high of the day. Okay, then it distributed to the downwards direction. Price moved downwards. That's why that candle is actually bearish. Okay, so price moved downwards to come and form the low of the day. Look at the low it's formed. So after forming the low, it's pushed up a bit, okay, to close. As you can see, the day has ended right there. These broken lines are telling you that this is now a new day. These broken lines here are telling you that this is now a new day. Okay, so how are you going to take advantage of this? Very, very easy. What you do is, price, since our bias is bearish for the following day, price is going to manipulate upwards, okay, before displacing in the downwards direction. So knowing that price is going to manipulate upwards before displacing in downwards direction, your job now is to come and look for other blocks that are unmitigated, other blocks that have not been tapped into in the previous day. Okay, so you draw horizontal lines to mark out the boundary of these other blocks. These other blocks are where price is most definitely going to come back to when it is manipulating upwards. It will come back to take orders from there before pushing in the actual direction the big players want to go. So that's the system you are going to use to actually join the big players when they want to displace the price, displace price in the direction they want to go. So what do? Look at this. Can you see this order block right here? Very powerful order block up here. It is unmitigated, price has not returned to it. I'm talking about this order block. So I'm going to be using two horizontal lines. Let me copy this. Two horizontal lines to mark it out. Right here. Another one. Okay. So that's my order block right there. Okay. If you come down here also, you see that there's also another block right here. Okay. That's not been tapped into. So I can mark that out also with two horizontal lines. Okay, so these are my two other blocks that have not been tapped into. Now price is going to come back and tap into these other blocks, but if you want to actually have a higher risk to reward ratio, please always take other blocks that are in your premium. If you are looking to sell, it should be in your premium area. Okay, this is a premium area for selling, because this level is lower than this level. So these are 2 points of interest, but this one is lower. So if you're selling from here, you'll be getting a smaller risk to reward because it's kind of low. It will definitely react from here, but this is the major place where you have a bigger sell from. Okay, so what we're gonna do from here, let's see what we're gonna do. This is the new day. What do you see happening in the new day? We've crossed into the new day, price tapped into this, displaced downwards and broke structure. You would have made money with this. Okay, so price moved in the opposite direction as if it wants to move up, manipulating, then it displays downwards to break this structure. So price has fulfilled its objective. So you would have made money with that. Okay, so those that took their trades from this particular level, they would have made money and gotten out of the trade. But those still waiting for price to come here, they wouldn't have made money yet. And see what price did. Price later manipulated upwards again, and finally came to tap into that what's it called, that other block that is in the premium region. Okay, tapped into this other block. A lot of retail traders that don't understand this system, as price is moving up, they'll be like, oh, price is going to be bullish for the day, and they enter buy trades, and then they go to sleep waiting for price to just keep pushing in the opposite direction. Price is actually manipulating to a particular level. You need to know where the level is. So this is the level it was coming to. It tapped into that level and then did what? Gave a bigger selling opportunity to those that were patiently waiting for price to get to that level. So these ones would have made more money. You can see the way price displaced aggressively in the downwards direction. Okay, this video, I don't want it to be too long. Please, if you got any value from this particular video, subscribe to my channel, turn on the notification bell. If you have any questions, you can ask in the comment section. I'll see you in the next video. Thanks for watching.